All right, dudes. The plan here for today, you guys had said that 8-1 was a real brain buster for you. Kind of go through that here, the notes again, and then work through the work together problem. And kind of talk about like what the strategy is here and what it is that we're really doing. Yeah.
It says 8.1 is close.
I know, I have to, we'll sort it out here in a minute. Yeah. So the idea here is like, well, this topic is called recording closing entries. So it basically at the end of every month, what do you do as a business? You pay your bills, right? Make sure all the money's moved to where it needs to be moved and look at what you have left over. That's essentially the process that we're going to be doing here. Okay, so if you keep in mind what it is that we're accomplishing, like we have all these recorded things that we owe, we have all this recorded, like money's moved here, here, and here. Now is to get everything like back into the capital account, whatever's left back, pay off all our debts, and get everything back into the capital account. Okay? So pay off any of these expenses we've acquired, take our money from sales that we've earned, whatever's left over after we pay our bills goes back into the owner's pockets. That's the idea of what we're doing. I think if you keep that in mind, like everything makes a lot more sense. Maybe just. All right. So accounts used to accumulate information from one fiscal period to the next are called permanent accounts. So like that would be like your capital account is an example of a permanent account. Accounts used to accumulate information until it is transferred to the owner's capital account are called temporary accounts. So like our expense accounts, sales account, the drawing account, all of these things are temporary at the end of each like fiscal period. Every month, we want to zero all that stuff out and start fresh in the next month. We don't want to carry bills from one month to the next. Is everybody okay with that idea? All right. So journal entries used to prepare temporary accounts for a new fiscal period are called closing entries. So like at the end of your journal, on the last page of your journal, wherever you're at, you'll start this closing entries process. And then we'll transfer that into the account ledgers in our ledger so that at the end of this closing period, basically all these temporary accounts have a zero balance. So that's the idea. We're going to move, like pay the credits off with the debit so that they have zero, or take any debits for money we have left over, transfer that somewhere else with a credit to zero out those accounts. Is that okay? So again, remember that when revenue, that's the money coming in, is greater than the total expenses, that's the money going out. What we have is a net profit or net income. So on the income summary, that's going to be a credit balance. So remember we have that income summary report that we generated last section. We're going to use that as a source for a lot of the numbers we're going to be pulling from. And what is it if the expenses are greater than the revenue? Net loss, right? So that's that. So again, this is the idea. All right. So these closing entries happen in 4 phases. So there's 4 like classes of closing entries, and then the individual accounts that you have to worry about under that entry. Are we okay? So the first entry is going to be sales. So to get the number, I'm going to go to my income statement, find sales, pull the credit from the sales, and that's gonna be a debit on my ledger. And then my income summary will be the credit with the opposing number. Okay? So again, sales are a debit in my journal, because that's money coming in. Okay? The next phase are going to be my expense accounts. So again, my title is income summary, and then I have all the expense accounts from my income statement. I total up all of the expenses. That's the debit for the income summary. The credit are the expense, the value for each expense account. Everybody's okay there? And again, this is like the total that we spent on advertising expenses. That could be like 7 transactions, but that's the sum total, right? Because the income summary is like a net, right? It's basically a snapshot of what happened that month or whatever. Is everybody okay? So that's the second step, right? We have to close these expense accounts. The third step is to take the net profit and move that into the owner's capital account, right? That's basically their bank account for the business. So I have we had our expenses, and we had, from our expenses, we had our income from the sales. That difference is our net income. I could pull that from the income summary. That was one line on my income summary. But that's the amount that's gonna be moved into our capital account. So it's a debit from the summary and a credit to the capital account. Is everybody okay? We'll do the work together and fill all this stuff in. And then the last piece that we have to do is we have to take any money in our drawing account. That's like the owner's expense account, right? And put that back into our capital account as well. So I'll go to my income summary. I'll look at whatever's in my drawing account, and I'm just going to move that from the drawing into the capital account. Is that okay? I'm gonna just go into the thing to work together here, because we also have to sort out what's going on with the closed, right? I forgot to look at that. I was too busy trying to sort out what to do here. All right, so we got this guy, and this guy. And we want to, edit dates or times, I think. Okay. So let's move the due date here. If I move this due date to like Monday, is that probably enough time for you guys to crank through this after getting like a real lesson?
That would be great. Thank you.
Okay, so I'll do that. Okay, this is so stupid. Today. Oh my God. Okay. Yeah. Yeah? Yeah? Okay. All right. You guys have your Cengage open and pulled up?
Yeah,
Will somebody check to see if you can now get in?
I'm
Maybe
refreshing.
you're refreshing right now to see if that's gonna go. Let me know.
Yeah, you can get in.
Okay. So if you don't have your tablet open and your Cengage up, and we're gonna pull up the work together here, and we're gonna run through that one. reset. Because I had this all done. Okay. So I'm gonna pause for a moment and let everybody that needs to get their stuff logged in and get to the right spot, There's a couple of instances where nominally I pulled out my calculator because I had to add and subtract numbers. If you want to have your calculator out so you can do that, that's great. If you're like, I get the idea, Mr. Kulik, I'll worry about it when it's time for me to have to do it. That's fine too. Okay. Are we ready to go? Anybody still logging in? Okay. So the first thing here is I'm going to go and fill in my page number. So if I read the directions, it says the completed worksheet and chart of accounts of Fix It Now for the month ended in April 30 of the current year are given in the question assets on page 8 of the journal provided. Journalize the closing entries. So it tells me we're on page 8 of the journal, so I'm going to start and fill in the page number as 8 as my very first step. Everybody good there? That was just in the directions. Also, it says, note if there is no value to be entered in a specific field or if the value of an item is not relevant, leave the field blank. That direction changes on the post-closing entry, so I'm just pointing that out to you now. That usually it's been just leave the stuff blank. All right. So again, if we go back and we look, the process, we did sales, expenses, capital, draw. Those are like the 4 phases. Okay. So the date for each of these will be the 30. And the first one is sales. And the entry there is income summary. And again, if you're like, when I worked on this, I kept pulling up, like the PowerPoint for each one of the phases and going back to that. I ran through this morning to make sure that, like, you guys said this was hard. I wanted to make sure I was on point for the explanation, but sales and then income summary is the first phase. We just have to pull the numbers now. So if I go to my sales here, it says the sales was, where did it go? This is so inconvenient. 2160. And if I go back and look, the sales was debit and then credit. So I'm going to do 2160 as a debit and then 2160 as a credit. Is everybody okay there? And if you want, we can hit the check your answer and everything looks good so far, right? Again, my date, everything is going to be the 30th, the last day of the month. The next one is, the title is income summary. And the entries under income summary are going to be all the expenses from my worksheet above for my, so if I go down here, my advertising expense is my first expense. So I'm just going to start by typing in these account titles, and then we'll worry about adding in the numbers afterwards. So add advertising, and then cash short or over. And then we had insurance.
Here's a question. Yes. And then miscellaneous, oops. Wrong one. Miscellaneous. And then supplies expense, I think. Is that right? Yep. And utilities.
I'll just pause here for a moment. I know that you guys are probably following along and keying stuff in. It takes a minute to type it in before we start putting numbers in their places. We good to go? Okay. So now I'm going to go back to the worksheet. I'm going to leave the income summary for a moment because to get that number, I need to add up these expense values. So I'm going to go back to my worksheet and start transferring these values over. So my advertising is $460 and cash short was $6. $466. My insurance expense actually is right here, $125, because that had an adjustment to it, which is pretty standard. I go back to my miscellaneous, and that was $189. My supply expense is right up here, $153. Again, there was an adjustment on that, which is pretty standard. And then the utilities is last, that's $550. So for that income summary debit, I'm going to go ahead and add up $460 plus 6 plus $125 plus $189 plus $153 plus $550, which is $1,483. I'd also point out to you guys that that is the income statement debit total. Right, the 1483 is that number there. The same thing that we got by adding up all those values. Is everybody okay so far? So again, what's happening right now is we had all of these credits, right? These are like money we paid out. To zero them all out, I'm going to move this much money in to clear all those debts basically off my books. Because at the start of the month, I don't want to have bills from last month piled in there. Does that feel okay as to kind of what we're doing? Now the next piece is the taking the like the net income and transferring it into the capital account. So let's look at the PowerPoint again for that and look at how that's formatted. So we did that one. So this is income summary is the title. The capital account is the sub account there. And this number is the net income for the month. We're going to take the net income and move it into the capital account, is what we're showing or what we're doing here. So the easiest way to grab the net income is there's a line here on our worksheet that says net income, 677. So this is income summary. And then below that is the capital account for, who's this joker that owns this company? Connor Whitney. So we're going to debit the 667.
677.
677, thank you. This is a classic Mr. Kulik mistake here. 677. And credit. Okay.
That's phase 3 of this. The last phase, if we look, was the drawing. Oops. Where is that? My thing? There it is. Let's just look at what that looked like again. So this is us taking the drawing, whatever's left in the drawing account, and moving it back into the capital account. So it's capital, and then drawing is the subheading. So I go and I look at what's in the drawing account up here, 1,700. So that's going to get moved from the drawing to the capital. And that should do it. I grade my step, and I think that's the whole thing. So grade this step and move to the next piece. Okay. So for this next phase, or the next part of this problem, we've gone and added all the closing entries to our journal. Now we're going to journalize this by moving that information into our ledger. Okay? So on my journal, I have to add my post references. So I have to write down which account am I taking this information and placing it in. So I need to fill an account number there. And then in the ledger, I have to record the page number of my journal that I'm getting this information from. So the first piece is sales. So I'm going to go down below and look at my ledger. So I'm going to go for sales. That's account number 410. So I'm going to go and record my post reference as 410 for sales. The date still is the April 30th. It's always the end of the month. This was journal page 12. We filled that in the beginning, so my post reference in the ledger is going to refer back to the journal, right? The journal post references to the account number. The accounts reference back to the journal page number, so it's like a circle. So we have to zero this credit out. Oh, that was supposed to be. Oh, page 8, sorry. That would explain why it wouldn't let me start the second page. Thank you. We have a credit here. To zero this account out, what do we need? A debit of the same amount. And then here at the end, I need to do 0 and 0. So if you look at the directions here, if the credit or debit balance is 0, enter 0 instead of leaving the cell blank. That is only for the ledger accounts. And only for that final line there. So I do have to do that. Pretty good so far?
Wait, what? So is there a circumstance where it will be like a number instead of 0 and 0, or is it pretty much always 0?
In the capital account. But all the other temporary accounts get zeroed out. So the permanent account, the capital account, should always have money in it. That's like the company's money. All the other the accounts that get paid or emptied at the end of the month should be zeroed. All right, the next one is income summary, and that happens 3 places, right? So we're going to have 3 entries in our ledger. So let's find the account for income summary. Oops. There you are. So I think this is April. Was that the month we were in?
Yep.
Okay. So April, and then everything happens at the end of the month. Everybody's in page 8. And then I'll go back up and look here. So I have at first oops, I should fill in those numbers too while I'm thinking about this, is account 330.
Let's do that real quick. Okay. So the first income summary is a credit of 2160. I have a debit of 1483, and then another debit of 677. So credit 2160. Which gives me a balance of 2160 credit. The next was a debit of 1483, I think. Yep. Now, I have credit 2160, a debit of 1483. So what is still going to be left in this account is some credit, right? Because those two are canceling each other out. So my credit here will be the difference in 2160 and 1483, which should be 667 or 677. But I'm going to type it in anyways, just as a double checker. So that is 677. And then I have one more debit of 677. That was the last income summary line, which leaves how much left in my account at the end of the month? 0. Making more sense as to kind of what this is that we're doing. I think adding a little bit of context. It was hard to get the context from the PowerPoint. So being able to talk about it. All right, advertising expense. So I'll go find that guy. So again, we're on the 30th, page 8. We have a debit of 460. To cancel that debit of 460, we need a credit of 460, which leaves us 0 at the end of the month. And then that's account 510, so I got to transfer that back up here. The next one is cash short and over. So that's 30th the month. 8 is the page. I have a debit of $6, means I need a credit of $6 to cancel it out, which leaves nothing in there at the end of the month. And that was account 520. So transfer that up there. Insurance expense. Dates the end of the month. Page is 8. I have a debit of 125 in there, meaning I need a credit of 125 to zero it out. And that's account 530. And miscellaneous expense, 38. I have a debit of 189. I need a credit of 189 to cancel that out. And that's account 540. Supplies expenses next. End of the month. Page 8 of my journal. I have a debit of 153, means I credit 153 to zero that out. And that's account 550. My last expense account is utilities. Page 8. I have a debit of 550, so I have to credit 550, and that zeroes us out. And that was account 560. Does everybody feel okay with what we're doing here? Do I need to pause here and let you guys catch up as we kind of blasted through those expense account closings? We're okay? Okay. All right. Next one up is the capital account. Notice that I have 2 entries there for the capital account, so I'm going to have to do this twice. So again, both the 30th, both page 8s. I look at the first capital account and I have a credit of 677 and then a debit of 1,700. So credit 677. So I had 7,443 as a credit, so I have to add the 677 to that. That gives me 8,120. And then my other pieces, I had a debit 1,700. So that'll subtract 1,700 then, and leaves me with 6,420. I think I did that right. Let me just double check here. Okay, good. Is everybody okay with how I did the numbers there at the end? What I added and subtracted or whatever to get the values? Okay. My last one is the drawing account. Oops, forgot to put in the post reference there. Would have been 310, I think. Yeah. Should do that. 310, 310, and then 320. Again, the drawing is a temporary account, so it just gets zeroed out at the end. So that's going to be 8. I debit 1,700, so I got to credit 1,700, and that zeroes us out. And that's everything.
Are we learning to keep going through today as well?
We don't have to.
Yes. This is a lot. Yeah, I was gonna say.
It's one of those, like, once you've kind of done it on your own once, like you get the feel for how the numbers are moving around, it's not so bad. My suggestion, again, like while you're doing it, have that PowerPoint open, refer back to it, get a feel for like, okay, these are the steps, these are the headings, like this is where everything goes, and it's fairly easy. I ran through, like after I figured out the first one and how things were moving around, the application I did like in half the time it took them to do the work together. Once I figured out how to do the work together. So I had to go back and read the textbook a little bit. I'm like, what is the purpose of what we're doing right here? So like sometimes it's obvious to me from the PowerPoints. This one is not obvious what we were doing. But once I figured out, oh, we're basically just like closing out our month and making sure everything is paid up before, you know, the next month starts. If you think about it that way, everything makes a heck of a lot more sense than what you're doing. Everybody happy?
Yep.
Feel better about how to do or what you're doing? Way better. Okay. And you guys should all now be able to re-access everything. So, sound good? Everybody happy? Fair enough? All right. I'm gonna stop the recording and kind of get out of your way and let you finish stuff up if you're still working on things, or if you're done. You're done. If you're like, ooh, I finished, but it wasn't very good. You can redo stuff now that you've had a little bit more instruction on it. Probably feel a lot better about things. Either is fine, you know. You know, you can always go in and restart the stuff and take another attempt at it, and I'll just see the better attempt. For your most recent attempt, it doesn't get you like, you know, if you do worse the second time, God help you, but you just show me the second time. Yeah, sure. Okay.